Catherine Harris last updated 1650, October 9, 2017. First NZ Capital believes MetLifeCare and Summerset should consider merging. Retirement village operators Summerset Group and MetLifeCare say there has been no discussion on a merger between them, even though an analyst has suggested they might be better off if they did. First NZ Capital analyst Ari Decker wrote in a research note that a merger would put the two companies in a better position to expand into Australia, particularly as the domestic property market starts to slow. We raise the question of what a more benign property market might mean for capital appreciation in the medium term and highlight why the upside for investors in both Summerset and MetLifeCare from a re-rate and merge-go could be substantial, Decker said. Glenn Sorai, we have a very clearly defined strategy of seeking to differentiate ourselves in the market. An upbeat property market has been good for the retirement village sector, which bases the price of occupation rights to their units off median house prices. Read more. A retirement sector needs migrant workers. Summerset, however, as the sector appears to slow down, Decker suggested Summerset and MetLifeCare consider joining forces. MetLifeCare's balance sheet was strong, as was its operating cash flows and embedded value, while Summerset had more advanced development capability and a good land bank. On Thursday, Summerset Group said its sales of occupation rights fell about 21% in the third quarter, with a decline in both resales and new sales. Neither operator completely panned the idea of merging, but both said they were very focused on their own plans. Summerset's Deputy Chief Executive Leanne Walker ruled it out for the moment. Our model has always been to construct our own villages rather than buy or combine with other operators, she said. We are well prepared to expand into Australia, should the opportunity arise, she added. MetLifeCare, which has not indicated interest in crossing the Tasman, said there had been no talks with Summerset. Chief Executive Glenn Sorai said the company was focused on its own organic growth, largely on Auckland and the Bay of Plenty. Obviously Ari has done a bit of indicative work on what the benefits of that could be in the future at this stage, and I'm not going to speak for Summerset, but we have a very clearly defined strategy of seeking to differentiate ourselves in the market. Decker said both companies had been growing fast in terms of building units, but their share prices in the last year had been moderating as investors started to factor in a more benign property market. There was plenty of competition here, but Australia had lots of potential because the New Zealand continuum of care model was not broadly available. Ryman is 6 years into its move in Australia, and we know Summerset is actively looking at it, albeit with constraints we perceive around its ability to make a meaningful entry in the nearer term given its capacity. We believe a merged entity could be better placed to push on with Australia in a more timely and meaningful manner, Decker said. Whereas the two operators on a standalone basis are looking to do 3 to 4 village equivalents per year in New Zealand, on a combined basis they might do 2 and look to build more quickly in Australia. AAP